What is going on, guys? It is Chris here and welcome back to another video. Today is September 22nd and we are going to be doing a huge analysis. Now today is going to be a little bit different than usual. We're not only going to be comparing SPY, ES, and SPX and those main three as well as big tech, but we're actually going to be going beyond that. We're going to be looking at interest rates, the macro side of the entire market, economic side as well, and all those other different aspects, as well as smaller stocks in which I think are going to have the most substantial downside and the best opportunities to make money off of. So let's just get right into it because there's so much to talk about today and we kind of need to speed through a few of these. But we're going to start with obviously the general ES analysis. Now what I believe we're going to be doing on this, it is a tad bit split, and let's go to the SPX, a little bit easier to see. So in SPX, we're nearing these yearly lows, right? For SPX, it's 3640, and then we have this low right here at about 3730, which is about 90 points off that low. That's where we wicked on July 14th. Now, just for comparison, I did say huge rally on June 30th. So what was June 30th? This is back here. So I've called the rally that we've had so far, and I've also called this crash, which is August 13th, and then that was one day off of the high, or 2 days off of the high before we saw the big crashes. Just for comparison on where you guys where I'm coming from on all this sort of analysis and what to trust, right? So I believe we're going to be seeing 3,500 in the next few weeks. I reiterated that in all the discords. I sent that out. I think we're going to hit 3,500, but before that we could be seeing some bounces. So I think we're going to see maybe a 2 to 3% bounce, and I'm going to show you guys exactly what I'm talking about because we need to, of course, still speed through these. But what I'm talking about is kind of like this formation. So in 2008, I like to compare to 2008 a little bit, as well as 2000. We saw this low right here. This is basically the double bottom for the year. And before we hit that, and we're in this area right here where we're selling off and extending off these levels, we could be in this zone right here where we see a substantial pop. And so if we see that pop, and this is on ES futures, right, off of a low, we would see sort of like a 2.5% move, and I'm expecting there to be a liquidity grab. So if we see this on a smaller time frame, it's kind of going to look like this. We're going down, we chop like this, and we upside, and it's a huge liquidity grab before we go to downside like this, sort of like a measured move like that. So that's what I'm expecting for SPX and ES and just the general market to be happening, what we expect to happen. And now in 2000, we saw a very similar move where before we hit these yearly lows, we saw a continuation right off of this big downtrend. Now this is sort of a slower downtrend actually for 2000, and it kind of just accelerated into the break of the low of year, but we saw that bounce as well. And so when we saw this bounce, what was right here, we saw a 2.7%, 2.8% pop. So it's very possible that we see I know there's a lot going on here, but it's possible that we see a 2.5% sort of pop back to say 3,800 plus level. It kind of depends when we bottom, but I think we're going to see a wick day and we should see higher after that. And then of course we're going to be going lower. Now the only scenario which would kind of throw this off, and if this happens, we can very quickly change our view of what's happening in the market, just so a heads up, because it's not 100% definite. We could see a scenario where we actually continue to come down here, and then a ton of buyers come in before we actually go to the low, and it actually consolidates a little bit before we go into the break of the low of year, because we have midterms and everything. It's coming into the low the end of the year here, and we might have sort of either a Santa Claus little rally in through here if the buyers are strong enough. But what I kind of think is we're going to break, and then the Santa Claus rally comes during this next bear market rally, which we see like this, right? That's what I'm kind of expecting. So break the low of the year, and then we go higher into the end of the year. So that's for ES analysis. Now there's so many other things we need to get into, so let's try to speed through these. So the first thing I want to be looking at is Meta and a little bit of other tech. So for Meta, we saw a break of our yearly lows, consolidation from June. So mid-June, we were seeing this consolidation at the 155 level, and it kept bouncing. Then we bounced recently, liquidity grab, and now we've gone a lot lower. So this is very concerning, especially heading into earnings. We know the earnings have been pretty shitty the past few quarters, and we're actually at our COVID lows. That is insanely concerning, especially for a company like Facebook, which isn't spectacular, but we're down 65% in a huge mega stock company. That's very concerning. So Meta, that's the first thing I wanted to look at. Now Apple's another stock I wanted to look at, and that's because we have our VPOC at 146, let's say 145-ish here on Apple, and we have a lot of buying in this zone. So Apple's nowhere near our yearly lows, as we can see. Different from ES. I think ES is about 2 to 3% off the lows of the year. I think it's something like that. But we should be seeing a lot of downside on Apple, especially when ES starts to break the yearly lows. But right now we're 15% off, so that is something that's very substantial for Apple. This could be a better short opportunity than say ES or Microsoft, which are already low. And that actually brings me to my next point, which is Microsoft. And this has also broken its yearly lows. We saw a lot of fake outs on this sort of pattern through here, which of course the hedgies don't care about. But this is a retail pattern. Everyone went long, say on this bounce here, and now we've had this big liquidity grab before we went to the low of year. So that's concerning for Microsoft because we're at a low of year. And if we look at the chart, say compared to COVID, of course it's still up nearly 100% from the COVID lows. But this is an area of demand, right? So people should be buying in through here on Microsoft. So it's a split decision on the market where Apple is, pretty weak, I would say. This can definitely go down a lot. ES is very weak, but then we still have companies like Microsoft who are actually already below the low of year, and also Meta as well. And we can look at Google. Google's already at its low of year, and we have Nvidia and AMD, which are very low now. 125, and the high was about 350, so more than 50% off the high as well. Now I want to look at one more thing on this list over here, which is UVXY. And this is a bit concerning, and I'm a bit confused as well. There's a bit of manipulation going on UVXY, I would say, and VXX, which is your VIX. And that's because we haven't broken this high from September 16th, even though on September 16th, we actually have already broken this on SPY. So we've gone lower on SPY. But now, and it's going to go into the next larger topic I want to talk about here in this video, there's literally no hedge for inflation or anything, right? Like, what is the hedge at this point? You have Bitcoin. And what is Bitcoin doing? It's being absolutely horrible. It's been consolidating since June, just like we saw with these other tech stocks like Meta. So we've had Bitcoin consolidating, had these random pops, and it just sells off. Like all these gains that we had from early September completely just sold off and they vanish now. So there's literally no hedge. And gold also. Let's just go to gold real quick, so I want to check that out later in the video. We retested this large trend line that we had, and off the peak of 195, at least for GLD, right? We're now at 155, 156. So that's concerning. There's absolutely no hedge except for actual cash. And so we can look at DXY, which is another ticker I wanted to be looking at today. And DXY is obviously just straight cash in the US dollar. So we are, I think, at a very high, higher than 2008, I believe. So way higher than 2008. We're just completely pumping on cash in the US dollar. So this is something that you guys should be looking at. It's DXY, that's the ticker. You can look at the weekly chart. We basically only saw these levels back in 2000, and you can see in 2008 we were pumping as well a lot. So it's very similar on these patterns. Of course, this will consolidate. I'm sure it's not going to continue and continue. It's going to consolidate and then head lower when inflation begins to ease as well. But again, this is perfect segue on all of these points here. We have our interest rates at 3 to 3.25%. And so that's obviously very concerning because we just had the 75 BPS rate hike, and our inflation numbers are also off the chart. So we can look at this article right here on inflation. We have October 13th is going to be our September inflation number, where we saw 9.1 in June, 8.5 July, and 8.3. So we're overall decreasing, but we kind of saw this earlier in the year where we saw 8.5, 8.3, and then right back up and went to 8.6 and now 9.1. So that's concerning because we could just be seeing a temporary dip. Now, we have oil prices, of course, which are going down. We have oil prices which are very far off of their highs, as we can see here on CL futures. For our crude futures, of course, our high of the year was back in March, and I believe this is Russia sort of stuff back here. But then we had the secondary pump in June, and just off of those highs, it's at 122 up there. Now it's at 80. So a very substantial drop off that high, of course. So that's something to note. And leading right into another sort of sector, which is, of course, energy. We have ENPH, which is a notable energy stock that I like to look at. And ENPH just had a substantial drop today of about 7%. So I would say that sort of energy would be a hedge against inflation, would be a good stock, a good sector to be buying. But then again, we kind of have already topped, if you ask me. We've had this liquidity grab above all these highs. And if we draw a trend line here, which again, the big money does not care about this. Why is it not drawing my trend line? There we go. So this trend line has been hit. I think we can actually retest up here at like the 300 level and then head lower. But right now I'm short on energy. So like, what the hell do we buy, guys? Like, I want to talk to you guys. What do we buy? There's nothing to buy that we can hedge. And if you guys have anything, just please let me know in the comments, because right now I'm just day trading, but there's no tech that we can buy. Absolutely no tech that we can buy. And if we go to something like FedEx, we just had FedEx drop about 22% on ER. And this is something I wanted to talk about today. the CEO of FedEx said that he's expecting a worldwide recession. Now, of course, he could just be saying that for a variety of reasons, lower stock price, he can, accumulate shares and whatnot. It could be scaring investors for whatever his reasons may be. But usually you don't see CEOs being this direct unless it's actually significant, right? If they're truly believing in this. He must have said that for some sort of reason that is unknown at this point, unless he's truly confident that we're going to see a worldwide recession. So we saw FedEx drop down about 22%, and now UPS is something I wanted to look at. This is a great short if you ask me. Now, I do think we're going to bounce. So this is one of the stocks I wanted to look at today for a short opportunity. I think this is going to bounce a little bit, but when we bounce, it's going to be a great short simply because they're going to be able to test this level down here, 165. Now, FedEx or UPS, sorry, moves a little bit more slowly, but the options are not that bad, and we should be seeing 165.34 within the next few days, especially if we see SPX break the yearly lows next week, which I expect it'll probably break next week or the week after. We should be seeing UPS, which is a great short opportunity, breaking its lows right here of the year. So that's one great short opportunity. Another one I want to look at is T. Now, it's a little bit scattered on, all these sectors, but T, which is AT&T, sorry, not T-Mobile. AT&T, we have this huge supply zone that ranges back all the way to 1994. In this area, we've literally been in a range for about, 26 or 28 years here on AT&T. It has gone absolutely nowhere. And we are back at the zone of $16 a share. And I think investors will be accumulating here. But I think until we hit 16, which is, still 24 cents off, or 15.77 to be exact, that's the nearest low that we have. They should be targeting that area. And so I believe that they're going to hit that. And there I can be a buyer. But I'm kind of thinking with this huge downtrend, we could see a pop back up to say even 20 before we go a lot lower on AT&T. It looks like they're kind of shifting out of the sector since 2016. We've actually already seen that shift. It's down 50%, and it's not dropping substantially over short periods of time, being in massive bear markets very quickly like our tech sector and our overall market. It's been a little bit more slow. So of course they're selling this one off, and I don't think they're going to be accumulating too much at these levels. We should see a little bit of a pop, but then it goes lower. So that's T. Let me just look at my list because I have so many tickers I wanted to look at. GS is something else that's very noticeable, or very notable. Now, on GS, we saw this big trend line being broken, but banks are very weak if you ask me. People are going to say, okay, this is a good time to buy the dip, right? But really, when you just saw this extend off of this downtrend, we had a liquidity grab here. It's very obvious that we had a liquidity grab. Now we are what percent off the lows? Like 10%? So yeah, about 10.8% off of our yearly lows. This will be an area which you will see insane volatility on banks and GS in general. 278, if you want to chart that out, that's a very notable level. 278.23-ish. We're going to see a ton of absolute volatility on GS. But until then, we're going to try to break this trend line. That's what they're trying to do right now. They're targeting this trend line, 280, and then of course lower at 277. That's what they're going to be trying to do for GS. Now, another one is Intel that I want to look at. Intel is also a great short opportunity, but also kind of brings up concerning aspects of the market, and that is that Intel is now back at 2015 levels, or yeah, 2016 levels. Early 2016 is when we were at this level. So Intel is now off, I think, over 50% off the highs, I believe. Yeah, 60% off the highs, rounded. And we saw this huge downtrend that actually began last year in April. So this one's already been downtrending for many months, over a year now, and it's just been complete sell-off. I think that this can be a very good stock for continued downside until we say we hit a 25 level, which is still 3 points lower. So this is a great short opportunity if you ask me on Intel. Now, another stock that I also wanted to look at, I know we're just going quickly through these. We looked at gold, we looked at DXY. I want to look at the US 10-year. So let's just go here. US 10-year is also very important. So we have our bonds just absolutely rocketing. Again, today, they're now at 3.7%. So that's very, very high. I think that's the highest level since 2011, if I'm not mistaken. Let's see here. Yeah, since 2011. That's the last time we hit this level. We broke the 2014 highs. We broke the 2018 highs. Now, this is something that's, somewhat concerning. But at the same time, I don't think that there's a strong correlation between the bond market and our overall, stock market. I've yet to see a correlation, and a lot of my other analyst friends have yet to see correlations between these two. And I've done analysis on it a little bit last night, and there just is literally no correlation on where SPY moves or where SPX move as, where the bonds move. So there's no way of really knowing if that's going to be topping out anytime soon. But they're still going to be doing rate hikes until the end of the year. I think Powell said he wanted to do another 100 to 125 BPS by the end of the year. I think they should hike more aggressively personally, but that's his plan. Powell's plan is to do 100 to 125. So that's that for our that's for that ticker on US 10-year, right? And the last one I actually had to look at, there's only one more surprisingly here, or two more, is F. So Ford had some very shitty news, and this is something that concerns me as well, because what's happening with Ford is they have supply chain issues. And so with their supply chain issues, what's happening is they literally don't have enough money to produce all the cars that are just kind of sitting around. Now, of course, this article vanishes in front of me, but I'm sure if you go through the news right here, you'll be able to see $1 billion of a loss in supply chain issues. I don't know why these articles always vanish in front of my eyes, but we also had a liquidity grab on Ford. So the overall chart looks extremely bearish on Ford. I think this is a great short opportunity again. It's kind of like they're attracting it to a certain level, and that certain level, kind of like we talked about on T and UPS and GS, is 17% lower. This is probably the best short that I'm going to show in the video. This is the best short. It's F, because they're going to try to hit 10.6, which is the low of the year, and off this high right here, this is classic sort of distribution, and they're not accumulating shares. This is kind of an example of what I believe will happen with Ford. This is Agilent Technologies, which is healthcare, and this is the chart that we saw off of its highs. It's very similar to Ford. As you can see, we saw a short squeeze and a fat pump, and we saw lower. And there's another one, ABBV, also had a very similar chart. As you can see, we just had lower on ABBV. So Ford should be doing a very similar pattern, and we should see 10.6 on this one. Now I need to make sure I went through everything, because I want to get all the data and all the info to you guys, and hopefully there's some of you who are still sticking around here. Tesla is basically the last ticker I wanted to look at today, and the reason for that is because we have this 3013 or 313 level that we are currently holding to the upside, right? And it's now what percent? 8% off of that, and our level down here is 16% off. So this support level will be super key. I bet you if we see 275, it is the easiest short in the world. Also 275 to 265, 10-point short super easily, because once they start to attract it to that level, this is just being used as a liquidity grab, because it's seen lower levels, 314.67. This is 313.37 or 33, sorry. So we're basically $1.30 off. That means this is being served as a liquidity grab because we failed to break this high up here. And so I think Tesla is a great short. And let me just confirm that I went through everything. Went through CPI, went through interest rates, went through big tech, went through semis, went through AMD, or not AMD, but went through NVIDIA's, and you guys can see as well. AMD went down 7% today. I've been telling you guys since the beginning of the year that AMD, NVIDIA, MU, they're all shitty stocks, I believe, at least in the short term, because their EPS are just wildly off the charts, and they're horrible investments for the near term. They'll be good sort of growth stocks during the dip next year, but right now it's not a good time to be accumulating. So that's what I had for this video. I think Amazon is one more chart we didn't look at. Amazon's also key. We had a liquidity grab. It's going to go lower. They're tracking it to 100, so we still have substantial downside for this one. Another great short. So I'm kind of just trying to give you guys the best shorts out of the group. We have ER on October 27th. I still think we downtrend till then just because of overall structure, but those are the best shorts. And especially with meme stocks dying off now as well, this is kind of another component. We basically saw these pumps, we saw the liquidity grabs, BBBY as well, GME, all these stocks. There's nothing that investors can really pile in on, or get short squeezes on, short all these people who are the apes going into AMC and everything like that. They can't make money anywhere other than the day trading chart. So right now they're kind of focusing, at least from what I can see, the volume on day trades and destroying retail during the day. And it's very specific structure that they're following. I've explained it in many other videos, but they're following their same structure of liquidity grabs to the upside, bounce days with wicks, and that's how they're getting us to kind of enter into these bullish positions, which we've all been a part of. I've been a part of that as well. But they're going to be pushing this lower. This is a very, very classic sort of push after this big candle on FOMC. They're going to continue to push this to the downside, which is why I swung puts. So we're 19 minutes into the video, and I'm going to end it here, but hopefully you guys enjoyed. I believe I went over everything, and thank you so much if you stayed to the end. I mean, if you stayed to the end, you should pat yourself on the back, because I think it's worthy of all the info that we shared today on this video. There's so many great opportunities, and again, I just shared my favorite ones and the ones I want to be shorting myself or longing. Of course, there's not really any longs, honestly, and there's no hedges, but this is what I want to be shorting. ES, Apple, all these other ones like Tesla, UPS, GST, all those other ones, Intel. So you guys let me know if you think in the comments. I will see you in the next video. I apologize for the length of the video, but I'll see you guys tomorrow. Thank you guys for watching. Bye bye.